I'm going to talk about the double entry system in accounts. The double entry system in accounts mainly deals with the following. It mainly deals with assets, liabilities, capital, profit, loss, expenses, and revenues. So these are the categories that makes up the double entry system in accounts. So for you to know the double entry system, you're supposed to know on which side are you supposed to record all these categories that I've mentioned. So before I start explaining on how you can record these items, first of all you're supposed to know their definitions. So what are assets? So assets are just properties that belong to the business, and for assets there are two types of assets. There are non-current assets and the current assets. So the non-current assets are the assets that are used in the business for a long period of time. And examples of non-current assets, we have fixtures and fittings, furniture, premises, and many more. There are many examples of non-current assets. And the other categories of assets are referred to as the current assets. So what are current assets? The current assets are assets that are used in a business for less than a year or for less than 12 months. So these are just used in the business for less than a year. And examples of the current assets, we have inventory, cash at hand, cash at bank, and in debtors. But there are many examples of current assets. Then on assets, I've defined the assets and two categories of assets. Then I'm supposed to explain what is capital. Capital is the amount of money that the owner invests in the business. So this is the amount of money contributed by the owner into the business, or the amount of money invested by the owner into the business. Capital is very simple. So that's the definition of capital. Then there are other category that I'm supposed to explain now are the liabilities. So what are the liabilities? So the liabilities are monies. These are monies or funds that do not belong to the business, and they are supposed to be paid to the owners, to the original owners. And there are two categories of liabilities. We have non-current liabilities and current liabilities. So what are non-current liabilities? Non-current liabilities are liabilities that are supposed to be paid. In a long period of time. So they're supposed to be paid, for example, in 5 years, in 10 years. So those are types of non-current liabilities. Then what are current liabilities? Current liabilities are liabilities that are supposed to be paid in less than a year or in less than 12 months. So they are supposed to be paid in less than a year or less than 12 months. An example of a current liability, we have the creditors. Then the other category that I'm supposed to talk about is profit. So what is profit? So profit is just excess amount that is gotten or calculated after subtracting the revenue after subtracting the expenses from the sales. So this is the excess of the revenue over the expenses. That's profit. Then the other thing that I'm supposed to talk about is loss. So what is loss? So loss is the excess of expenses over revenue. That's loss. The other thing that I'm supposed to talk about is revenue. So what is revenue? Revenue is the sales price. Revenue is the sales price of the goods that are sold to the customers. So this is just the selling price of the goods that are sold to the customers by the sellers. That's revenue. Then the last thing that I'm supposed to talk about are expenses. So what are expenses? Expenses is just the money value that is used that is used to bring those goods that will be supplied to the buyers, or the money value that is used to prepare those goods that you're going to buy, transport, and all that you're going to sell to the buyers. So expenses can be defined as the amount of money that is used to prepare the goods that you're going to sell to the buyers. So these are the categories that makes up the double entry system. So I'll start with the first point. For you to know the double entry system, first of all, you are supposed to know this accounting equation. You know that the accounting equation is assets is equals to liabilities plus capital. And when you write your equation, your assets are found on the left side of the equation, and your liabilities and capital are found on the right side of the equation. So this means that if you want to record assets, you're supposed to record them on the debit side of the account. This is because they are found on the left side of the equation. And if you want to record capital and liabilities, you're supposed to record them on the right side of you're supposed to record them on the credit side, because they are found on the right side of the equation. So for you to record this transaction, there will be either an increase or reduction to that transaction. So for assets, when there's an increase in assets, you record on the debit side. When there's a reduction in assets, you record on the credit side. When there's an increase in liabilities, you record on the credit side. When there's a reduction in liabilities, you record on the debit side. When there's an increase in capital, you record on the credit side. When there's a reduction in capital, you record on the debit side. Then there are other things that you're supposed to know. How are you going to record the profit, the loss, the revenue, and the expenses? So for you to record the expenses, you record them on the debit side when there's an increase, and when there's a reduction in expenses, you record them on the credit side. When there's an increase in revenue, you record them on the credit side, and when there's a reduction in revenue, you record it on the debit side. And when there's an increase in profit, you record it on the credit side, and when there's a reduction in profit, you record it on the debit side. When there's an increase in loss, you record it on the debit side. When there's a reduction in loss, you record it on the credit side. So these are the double entry system of these categories. If you know how you are going to record this transaction in the books of accounts, you'll be home and